Hi everyone, it's Nancy Goldratt. In this session, I'm going to go over an example to illustrate moving weighted average cost of calculation of inventory. The example has given us two set of data. One is about beginning inventory and purchases. The second is about sales. What you need to do if this is the case, you want to put all the dates of the sales inserted into the purchases. Basically, you want to put the dates in order of the events that happened. So I've done this here already. During the month of September, the beginning inventory was 46 units, and the cost that they gave us was 99. Now, remember, the cost, the unit price for the sales are not used in calculating moving weighted average cost. They only are calculated for arriving at the sales revenue. The cost of goods sold is arrived by looking at the units sold and the cost of those units. And the cost of those units using a weighted average cost, every time there is a purchase, we need to calculate a new moving weighted average cost. So let's start on inventory at the beginning of month was 46 units at 99. So the total cost was $4,554. When they sold 21 units on September 5th at $99, meaning the cost of the units coming from the beginning inventory, the total cost of the units sold, remember the cost of goods sold is $2,079. So how many units are left? 46 minus 21, 25 units are left as of September 5th. Their cost is still $99. Why? Because they're coming from the beginning inventory. The number of units left after the first sale are coming from the beginning inventory. Okay, so $99 times 25 units, the cost is, total cost is $2,475. On September 12th, they purchased 79 units and they pay $103 per unit, so the total cost of that purchase is $8,137. Add that to the number of units that was left as of September 5th, so therefore now the total cost of inventory as of September 12th is $10,612, and the number of units as of that day is 104. Now, if we take the total cost as of September 12th divided by the number of units, we arrive at the new weighted average cost, 102.03, and it goes a couple of decimals. Now look at your homework and see if they want you to round it to 3 decimal, to 2 decimal, or round numbers, 0 decimal. Then you do your rounding. I came up with, in this problem, rounding it to 3 decimal places. So therefore, our new weighted average cost as of September 12th is 102.038. So remember, always the total cost of the item on hand, what is left, divided by the number of items that are left, gives you the weighted average cost. Now, the next transaction that happens is that on September 16, the company sells 88 units. Now, remember, the cost comes from what we had available as of the last transaction, the $102.038. So, therefore, the total cost of the item sold or cost of goods sold for that day is $8,979 and almost 34 cents. So again, take the number of units that you had before, 104 minus the 88 that you sold. How many units are left as of September 16 after the sale? 16 units. The cost used to be $10,612. Now we sold total cost of $8,979.344, and so the total cost of the 16 units is $1,632.656. On September 19, we purchased 35 units, so 16 plus 35, now we have 51 units. The cost of the 35 units that we purchased was given to us, $106. So we paid, total cost of our purchase was $3,710. This cost, $3,710, plus the cost of the 16 units left on September 16, is total of $5,342 and almost 66 cents. If we take the total cost and divide it by the 51 units as of September 19, we get a new weighted average cost, 104.758, which is, I rounded at 3 decimal places. Now, September 26, we're selling purchasing 88 units at $103, or we pay $9,944. So again, 88 plus 51 that we had before. As of September 26, we have 139 units and $9,944 that we paid, plus $5,342,656 that we had previously is the new total cost. Once you get the new total cost and divided by the number of units available, 139, you get a new weighted average cost of $109 and almost 98 cents, and 109.976. On September 29th, they say that we sold 103 units. So September 29th, we sold 103 units. What is their cost? The cost of items we had available on September 26, 109,976. Multiply the units by the cost, you get the total cost. So now the 15,286.66 that we had as of September 26 minus the cost of items sold is the remaining cost of the 36 units that we have available as of September 29. I have taken this illustration one step further and I added more facts. Let's assume that there was a purchase on September 30th for 100 units and we paid $115 per unit. So the total cost of those units that we purchased was $11,500. Adding the $11,500 to previous cost that was available on September 29th gives us a $15,459.128 cost of how many units? The 36 plus 100, 136 units. So therefore, take the total cost divided by number of units. That gives you the new weighted average cost. And as you see, this average cost starts moving as we purchase more items. And that's why it's called weighted average cost. Hopefully this example provides you some clarification about how moving weighted average cost is used in calculating cost of goods sold and also the cost of items left for a company that uses perpetual inventory system. So moving average cost is only for perpetual inventory system. In the periodic system, we just use a simple average cost, which is much easier. And so if you have any questions, please send me an email via Canvas. Thank you.